Welcome, everybody. This is Carlos from Omegavus Trend and the Forecast Mastery Coaching Program. So let's get right into today's trade setup and forecast for the. Hold on, let me fix this here. For the Nasdaq future and the ES, I haven't done the analysis for the ES, but anyway, long story short, let's just get right into the facts. Here's the massive sell-off that happened about a day ago or two, about 2 days ago. The overlaps into Trump speaking, the situation with China, and all these beautiful things. The government closing, and there's a boatload of stuff that happens. But as soon as President Trump spoke, basically the sell-up happened. So we went into a daily chart and see basically what's going on. I deleted all the zones and everything, so I started from scratch after such a huge situation like this where the massive impulse move or sell-off happens. It's very important for us to pay attention to what might be moving the needle and the decisions that we should be accounting for in those matters, right? So in this instance, the market just sold off, and based on the information that we have here what is the support, the daily synergy zone support. This is another level of support. In reality, it will look something similar or something like this, like really big, just so you have an idea. But obviously for us, day traders, this is not as applicable because from one point to the other, we're talking about almost 200 points. So that's the reason I don't even, conglomerate that as a zone. I separate as levels and turn those as potential targets on the way down. All right. Now, these ones are a little bit tighter. So this one right here, right? That's another level. And then we have, these are like intraday 4-hour charts and 1-hour chart levels, which I'm going to break down for you at this moment. All right. So huge impulse move on the way up. If we identify this as patterns of explanation, if you're familiar with the Elliott wave pattern theory, the market moves in oscillations. So if I pick here, the market move in an impulse move on the way down, try to correct in a 2 to 3 step pattern. That's a corrective mode. Then an impulse move, corrective mode, and impulse move, right? So in this instance, when we talk about Elliott wave pattern, everything moves in oscillations of corrections and impulse move or expansions. So this is basically a 5-way pattern. Basically wave 1, correction 2, wave 3, correction 4, wave 5. When we try to make some logics into the market, we try to assess the concept of where we're at in the bigger picture. And for this instances, the corrections might happen in different formats, like in this instance is sell-off based on the news report or the president speaking. So the idea is to identify where that pullback might end. There is a couple of caveats here that we can apply. Basically, there are few that we call it the symmetry pattern, very old school, but very powerful. And you need to assess, are you in an impulse or in an impulse move or a corrective mode? So let's just go back here, right? If I move back and you can see the pattern of an Elliott wave and I overlap things here, doesn't these kind of resembles the concept of what we're looking for, right? So here's a kind of an impulse move going up, right? A corrective mode right here, right? So basically, maybe this came like such. If I were to be very granular about this, then this is another impulse move, right? So this is another corrective mode. Let me just put it like such. And we are in the assumption that the market might continue again on an impulse move. Again, these are all hypotheses, but at least we have something to work on, right? We got some logics behind it. We got some interesting facts of saying, all right, that kind of makes sense. And the whole concept is, all right, if that's the potential next upcoming move, now you have some idea of the trend. Now I can adapt all these modalities, narrow down the structure using techniques to look for buying setups, with whichever that might be, order flow transitions, Fibonacci pullbacks, anyway exhaustion points, liquidity void transitions, and there's gazillions of ways that they call it different name, but they just basically identify the same thing. It's just kind of a support ground transitioning into a buying mode again, right? So now that we have that kind of idea, right, let me just put this aside. I went into the daily chart, and for me, this is an impulse move, right? With a correction, impulse move, a massive correction, ABC. And of course, this is mostly a reality of the fact that although it's one single bar, it's just because it was a precedent-speaking engagement that disrupted the overall trend of the market, which is an impulse move or upward trend. My idea or hypothesis is that they at least are going to try to go back to the mean around the 25,128 to 212 area. And that will suffice to make a decision point to continue further down or break free and continue the main trend as they left behind. I'm not saying this is exactly what's going to happen. Again, this is all a hypothesis. Okay? So now that we have this clarity, we break it down. Let's see. All right. So now that I have this concept right here, I already identified the main trend and the pullback. Now, can I use this data and distill it down, right? Narrow it down so I can have more clarity? Absolutely. So in order for us to be able to pull that off, right? So let's just say at this point, I'm going to drop now to a 4-hour chart. And now you can start to see there is a bigger, better patterns emerging, right? So here's the massive sell-off, market pulled back up here, came back down this morning. And this, based on the 4-hour chart, based on this all this data that I have here, this is the potential massive transition point, right? And it became massive because of the size of the amount of the volatility that the market sold off before. On top of that, it's bouncing off a daily analysis support area. Back to the daily. This right here, it's a conglomerate of order flow and price action and data and levels. And a conglomerate basically is a mix of different studies combining into a cluster, weeding out what is not close enough, and just making sure that we centralize everything in one place. And on the daily, this is the prior swing high, transitional void here on the way down, basically order flow transitions. You can see how the market just in that area clustered through until they boost up and continue higher and so on and so forth. Anyway, long story short, this was a massive daily support zone where we were expecting the market to possibly find some support and bounce a little bit from here on. However, you notice here that the market left a gap back into the 4-hour chart, right? That's the gap that we're talking about right here. And that gap, if you know anything about gap, the market tends to gravitate and come back into that gap, that void, fill at least 50%, not at least, an average of 50% and continue off of that. So that's, you know, a lot of people playing ACT and all that crazy stuff that is basically, in other words, basically going back and filling the gap, right? So in this case, notice how the market came back, went and filled not 50%, but some of it, and now it's transitioning off of it and continue higher. Now, that's one study, right? So if we get to fill this void in, this is a gap, right? And notice how the market went right in it. Now, on top of that, it is overlapping my synergy zone. You see where I'm going with this? So now I have some clarity, right? I'm saying, all right, the markets must pull back in or pull back down, must come back into the area of the zone, of the gap, and it did. But on top of it, on 4-hour chart, I identified this massive support area right here where the market basically came right at the bottom and just drift upwards right now. And the idea, my idea, is that most likely the intentions would be from this zone up to go and fill the gap that they left from the not fill the gap, my bad. But go back to the previous day close. It's kind of a gap. On the opening, it's kind of an opening gap. The market opened below, blah, blah, blah. It's just going to fill the gap of what the previous day closed, basically going back to the mean, because I'm just don't want you to confuse two type of gaps. This is a basically gap up from the overnight session. And the gap that I'm talking about is basically from, let me see, from the 9:30 area, which is in here. Let me go back to 1 hour. We can identify 6, 7, 8, 9. So here's the opening, right? 9:30 over here. So the market opened, let me see, let's just say around a 300 point gap down from the previous day close. That's the gap that I'm referring in there. Okay. So anyway, we have the market sold off and closed yesterday. And then basically on the overnight session, you see that gap right there. And then that's the first gap that I'm talking about based on gap of structure. And based on the previous day close, as the market opened today, they left about 300 plus points, right? Gap down. We can verify that here. If we click on the OT and Q, you can see it tells you right now we're about 212 points gap down. So I'm assuming that they will possibly gonna try to go and close or try to push the market back up again as close as possible to the 24,922 area. Does that make sense? So this is very powerful on the OT because I don't need to see it here. I don't need to calculate or anything. I just basically, as the market progresses, and this is calculated, take a snapshot at the moment that you click it, and it's just going to tell you, oh, it's 213 now. So it's getting narrower. Does that make sense? So anyways, now that I know that there is about 200 plus points that are possibly available for the market to come back and close that will be my play. And that basically matches up with the fact of the long-term perspective, again, daily, massive bullish outlook, pull back on the Elliott wave pattern. This is an impulse move, corrected impulse move. This obviously was overextended because of the report or the president speaking, but it's a pullback. And on the pattern, I'm assuming basically that the continuation is continuing an impulse move, which that might be the case now. Nobody knows about the future. I'm just assuming that might be the situation. All right, back into the 4-hour chart. Now I need to assess, okay, so where is it that I have the best chances to expect for the market to transition from? And that's where the synergy zones are, right? So I'm giving you the support based on 4-hour charts right now. You can see that is a massive support between 24,640, 24,496 as the market close above that zone. And within the next 4 hours or so, if it stays above that zone, that is absolutely great. The next evolution would be for the market to go and visit the 24,808, 24,847, and preferably the 24,920. Okay, those are the next upcoming resistance points based on 1-hour charts. The goal for us is for the market to expand and basically go back to the 24,922, which is the previous day close. That will be the play, the absolutely best potential play that the market will probably gonna go for. And finally, if the market expand, is going back again into the 25,128, 25,212 area. And my goal here for swing trading would be to hit 25,212, hopefully in the resumption of the main trend into the upper side, with a massive swing opportunity at the 25,728 area. Okay. Now, what will happen if everything reversed back down? A close below 24,496.50 will indicate the market most likely will transition in a continuing downward mode, and it will visit again the 24,151, 24 24,085, 23,921, and 23,723. Those are the three major swing levels on the way down. In between all of those, we do have a potential retest of what we call a trifecta level of the 24,400. I'm going to mark that in here for you guys, right there. And that would be another level to pay close attention to, right? So a clean break of 24,496 will indicate that the resumption of the downward trend might be the case. There is no follow through on the buy side of mode. And basically this is just going to give us a huge headache for buyers. And a potential resumption of the downward will be validated. The first initial target or another immediate support level will be that 24,400. And if they clear that out, definitely they're going for the 24,151 to 24,085, and then targeting 23,921, 23,723. All right. So those are the levels on the way down. If you were to ask me, what should we do? Market is completely unbiased. Now let's just shift attention to the Omegavus Trend or the OT and pay attention how the M1 all the way to M15, it's mildly bullish, just not moving as such. It is just not, there's not much fuel behind it. And from M30 all the way down, it's slightly bearish. So as you can tell, both sides, they're not strong enough, right? They're just weak. It's weak bullish on the meaning buyers are stepping in, but there's no fuel behind it. And the sellers are slightly negative, but again, it's weakening out. So it's completely unbiased. So if I look at this in the bigger picture and you want to be very conservative at this, you will wait until the 24,847 it's taken to the upside to consider more robust and sustained bullish outlooks, meaning that would be kind of the toll, right? Or the resistance that we would like to see the market break completely free from in order to see a resumption of the market to the upside. And you can actually target the 24,922 as your immediate next target, which is quite different, by the way. I mean, it's quite a decent. So meaning you still have about 70-point profit right in there for until you find that resistance right in there. And a clean break below the 24,496, as stated before, that will be the resumption on the way down. So that becomes kind of a big, huge, massive range. And it makes sense with the OT, okay? The only play that we're doing right now is just because I'm trying to play the big swing analysis. I'm assuming that the market most likely will try to go and close the gap. That's the play that I'm trying to go for. I'm playing the support zone. I'm going to drop to a 1-hour chart. You can see clearly the concept here. The market basically, as you can tell, as the market opened, trap buyers in the bottom. Trap sellers in the bottom. Transition on, close above the 24,640 resistance area of the support of the 4-hour synergy zone. And the idea is for them to move towards the 24,808, 808.47, potentially clearing that up and going into the previous day close. That's my play at this point, and that's where I'm going after. Now, this is swing trading. Definitely not for everybody. And this is basically huge amounts of stop loss are basically below the zone or below that swing low that they left behind. That it's a massive, massive stop. However, if you want to be on the safe side, which is the one that I want to go off after, would be go to the MNQ, right? These are the previous levels before. I'm going to delete all of this. I'm going to clear that out. I'm going to consider myself a buyer here with 6 contract. Let's play it out. Boom. I'm going to place a stop on the swing low here. It's quite big. Confirm. I cleared everything out on the micros. I need to come up and create the targets again and whatnot. But basically, this is what I'm after. And my play here would be to go and target the previous day close, confirm, and all in all, this is pretty much the output at this point. I'm going to go into the 4-hour chart for a moment, and I can safely trail the stop a little bit tighter, and that will be my take on micro contracts at this point. Now, pay attention to the ES. You see the ES is stronger in relation to the NQ, and the ES tends to be a leading indicator. Does that make sense? So that's what I'm going to try to go. I noticed the VIX is getting, weaker and weaker on the lower notes, indicative that if the VIX becomes negative, the indices must come up. But overall, it's not there yet, right? We should not be tampering with this market because it's all mixed up. It's just mixed. However, take a closer look at the crude oil. It's mostly negative from top to bottom. That's one that we should be focusing on. Gold is mostly bullish. So we can see the M30 all the way to daily is still bullish. And these guys are just possibly going back into the potential buy mode. So let's just move into micro gold, MGC. These are the targets that we have. I haven't done the analysis here yet, but based on what I'm seeing here on gold, basically I'm expecting for gold to carry on and continue further higher. I'm going to drop into a 1-hour chart and identify basically a fuse resistance area, and I will feel confident. I'm going to put an alert here that if I break above that level of 41.57 to come back and potentially look for opportunities on gold to continue further higher. Now we got Russell, mostly bullish, a little bit weaker on the bottom, but everything is still bullish, right? There's no negative notes on any one of here. And YM basically very strong. So MYM, here we are. Nice transition into the buy mode, almost about to close the gap. So this feels like a great opportunity, and consider ourselves buyers here. This is great. You can target that area, not much. I'm going to be targeting the swing for now. Confirm. I'm going to bring the exact numbers here. Let me delete everything in here. I'm going to bring everything for you in a moment. All right, we're back, and this is basically what I have so far. I identify a massive power level right at the previous close, so it will be very good just to liquidate half of these positions right there. So I'm going to put to close 2 at that point, and I'm going to swing for the 46,685, and we have a 47,294 swing level back to the 4-hour chart. Those are the levels that I'm after at that point. Now, if I go back into the 1-hour chart, my stop loss, right? My stop loss here would be around there. There you go. So this is where I'm after. My worst case scenario at this point, until that target is being hit, it's going to be to focus right pretty much on that. Now look at the YM, it's just gaining some momentum. Russell is moving along. I don't like Russell much, but it looks fine. And I have targets on Russell, a 2501, 2535. This looks good. I'm going to go with only 4 contracts, right? Boom. There you go. And I'm going to target the swing on the top, the second one, confirm. And I'm going to put 2 at that point. And on the swing stop, I'm going to go, this is a 1-hour chart. Let me do that for now. Let me switch to 4-hour. Yep, that's the one. So hard stop is going to be 24.55. It should be the 24.42, but hey, we're already past the previous day close. That's a good indicative. OT massively bullish. Great. VIX extremely getting a lot of negativity. That means that volatility is just basically going down and pushing indices up. ES gaining some momentum and pulling NQ with it. So this should be absolutely great and good. If we go back to the NQ, notice how the NQ now is just tracking in. We are about $600. So we're going to do this. We're going to close 2, boom, and collect some funds up front. This kind of help us out because I'm going to leave the stop where it's supposed to be, right? But basically just think about it. So out of whatever I collected, if I get stopped out, it's going to lessen that's the total amount, if that makes sense or not. So this is where I'm at. Let me see here for a moment. All right, so here's the target that I'm looking for. So I'm going to be swinging for the big league right there. Of course, I'm just dreaming, but you'll never know. All right. And the next target is going to be the following. So I have 4 contracts and 3 potential layers. I'm going to share with you something pretty cool that we developed. It's part of a private group that we have, but it's just pretty nice. So you might saying, but Carlos, there might be targets in between these big swings. Yes, there are. I'm going to teach you how we can do it fully automatic based on a tool that we designed. I think I shared that before. I'm sorry. So here we go. 4 contracts. I'm going to close 2 here because that's what I like to do, right? So I'm going to close 2 contracts if we don't get stopped out. There you go. At that point, leaving 2 contracts, then that means that the next one is going to be here. So that's going to be another contract in there on the 23.0. Notice that I'm just placing my limits below the target, right? Not right on top of it. Learn my lessons, right? Always below. And that's where I'm at. So one of the tricks that I can do is I'm on a 4-hour chart. Let me drop to a 15-minute chart right here. And I designed a very cool tool that identify volume, order flow, and identify it in no trade zone, telling me as the market opened, it identified a range, if you will. And if the prices close above, the tendency is for the market to carry on further higher, or below, it's going to go obviously lower. And in the expansions, it gives you automatic targeting based on a multiple analysis that it's included behind the scenes on the algorithm. So it's called here, I call them smart money levels. Once I enable this, take a closer look. It identify immediately. Let me drop here. This is the 9:30 open. It's on this bluish rectangle, if you will. And as the market progressed down, it has these horizontal lines that you can see here drawing through, and those are potential targetings at the bottom. Notice there is a purple rectangle, and which is the previous day close right in between or in the middle of it. This right here is the weekly opening range that started on Sunday, which is awesome. And typically the market tends to use that to trap sellers at the bottom and transition from it. And again, if the prices close above that blue no trade zone area, the tendencies for the market to carry on further higher. The important thing is, based on order flows and other alternative of, not alternative, is a mixture of other analysis. It just create these horizontal lines as potential targeting, where each level is a massive resistance point, but you can use them as potential targets to the upside. And it gives you, I think, 11 or 12 of them to the upside. You can see them right there. Pretty powerful. So the beautiful part of all this is that when I overlay my analysis on top of this, it just gives you this very strong level of commitment, right, within yourself, saying, oh my God, I can just target those. Now, I'm going to let you into a secret here. It is the 4th level from the no trade zone. This is the blue rectangle is a no trade zone. This is a VWAP, right there. But anyway, just trying to explain it. I'm always try to go for the 4th level. There's like 1, 2, 3, 4. 4 is massive exhaustion in the session, where there's a huge amount of order flow against the trend, and it will stop the market in a dime and push it through a little bit. The same thing will apply on the bottom. You can see 1, 2, 3, 4, but you can see that one single 15-minute bar sold off at the open of the market. That's the reason we don't like trading the open. And right below it is the weekly massive support zone area. So that's the reason I didn't even trade it today until now. Does that make sense? I just let the market do its thing. If they really wanted to continue further down, there was a lot of targets on the way down. But I waited and the market just shoot up right here. This is exactly where we went long as a coincidence, right? Just breaking the same bar in 15 minutes that broke above that area. So there you go. We're going through it to the upside. And you see this yellow no trace on right there? That's London. And look how the market respect those opening ranges and so on and so forth. Pretty interesting stuff. We have a coach that is a freaking insanely good dissecting this to predict market movement and continuation is just insane. And this is kind of one of the tools that I say, all right, so if I turn it off, right, I have my targets, right? And you can say here, oh, are there any targets in between? You see that there's nothing in there, but when you enable this, boom, look, there are 1, 2, 3, 4, 5 targets in between before reaching to the previous day close right there. And the high, between the close and the high, there's another target right there, turning this into a massive zone. Is this making sense to you guys? Pretty neat, isn't it? And it works on most all the indices. We've been working on it to use it on different modalities. You have to tweak it for different markets because all markets are different, but they are really, really powerful, right? So, and if you're trading out of a 5-minute chart, it becomes even more prominent. So for those of you day traders, if you will, this is absolutely powerful, right? It just guides you. Here's a 2-minute chart, how it looked. Market opened, and you basically saw the sell-off right here, transitional on the way up, market close above that, and that's kind of your upward trend movement, and it will continue further higher. The green being the a maximum expansion of a move, right? After the blue one, you stop right on the dime, as you can see right there. And look how we almost missed the thick red line at the bottom, right? Pretty darn incredible, right? And look, the blue line at the bottom, which is the fourth line below the no trade zone at 930, also, obviously, there was a lot of volatility in there, but look how it actually held, and prices respect that level until broke above it, went back into the opening range of the 930, extended into that level, and the next step, assuming if they sustain this and they don't revert, it's just to go and close the gap. If they don't, that's fine, all right? So how do we manage this? Well, there's a different modalities for you to do so. I am swing trading again, so that's the reason I'm a little bit more inclining to keep my targets at swing trading and management, but that's the reason we added the VWAP. So we would like to trail the VWAP as such, and that's going to be my updated targeting. And those are the tricks of the trade that we use. No lower. I don't like to go lower than 50 minutes because I always like to follow everything on the 4-hour and 1-hour chart. Okay, preferably the 1-hour chart. Okay, so this, and it doesn't plot on the 1-hour chart the levels because they were intended to exploit order flow and data sets from 50 minutes down, right? So that's the trick and the secret behind this, right? So there you have it. So I hope that this kind of gives you some context and ideas. Let me go back to the gold. You see that it's just spiking in. OT showed us gold, YM and Russell, but gold was mostly the one that we should be focusing on. If I go to micro gold right here, let me see if we get it. There you go. And it's just hitting that. Remember that we left behind crossing 41.57. It just hit it. You can see it right there. So it's just warning us that the potential movement on gold, it's moving along. So we can just click here, get ourselves into gold. I'm going to place a stop on the prior swing low for now. Right? There you go. And I'm going to unveil 2 potential targets for you guys. And here it is. We got the immediate next potential target 41.73 and 42.13 for the swing side of things based on 1-hour chart. All right. So with that being said, this is all we have for now. No other setups so far. I'm holding this so far. Let's see how it works. NQ, ES are not to be traded. I'm just trying to walk you through the process, how I think based on the bigger swings and expectancy of the market. But just pay attention to the fact that it is not moving along. Does that make sense? It's just giving us a headache. The market is moving, it's not moving, it's coming back and forth. But I'm just following a process of a long-term perspective analysis, if you will. And that's one of the techniques and strategies that I use for a long period of time, right? If I go to the MCL, again, it just broke. I think we've been talking about this for quite a while. They finally broke below it. They're probably going to carry on, but I'm not interested in it. Gold is the only one that seems to be kind of giving us a great opportunity based on what the OT is showing us. MYM is the only one that seems to be kind of moving along. We just got a hit, no miss, but I believe that might be coming soon. And we got a target of 46,685 on the YM and 47,294 on the YM. Other than that, no more trades. The OT's showing us, if any, focus on gold, YM, Russell until the ES and NQ ramp up and decides to make a move. And finally, never forget to check the news today. As 12:20 today, we got Federal Chairman Powell speaking. The reason why I believe there is no movement because everybody's sitting aside waiting for the Fed to speak, so that the indices will have some clarity of what to look for. In the meantime, everybody's moving into the safe havens of investing either in the precious metal like gold. YM and Russell seems to be moving quite okay without being affected into the uncertainty of the next upcoming report. Let me know how you're using the OT. Let me know if you love this forecasting, and if you want to see any forecast whatsoever, let us know. We're planning something really nice, really big coming in. I'm planning to build one of the biggest forecasting group and networking soon. Let me know your opinion. Do you think that would be a great idea? Imagine having a analyst on demand, and we basically come together, do analysis and forecasting, so we can take action on it for the next foreseen week, days, and so on and so forth. So I'm just thinking about all this. Give me your thoughts. I'm open for feedback and your support. With that being said, good luck with your trading. Share the love with the loved ones, and I wish you the very best of success.